Hello traders, welcome to your technical market update for Thursday the 12th of February 2015. The key story overnight was the Australian dollar selling off, and that was due to the strong US dollar, but also the market started weighing in on the Australian employment figures a little ahead of time. So we've seen the market starting to sell off in anticipation of weak data, and in fact we got much weaker than expected, and therefore the market's continuing to sell. I expect the market to further sell off as they start pricing in a second rate cut. So the market now will be focusing on an additional rate cut possibly next month and sending the Australian dollar into the 75-cent range before too long, I'm sure. Now, with trading opportunities there, if we get a little bit of a bounce and we go to a 1 hourly time frame and draw a downtrend line or a series of downtrend lines that we need to capture here. We had the biggest fall this morning, and now if we get a bit of a pullback up heading towards the 77-cent range and we find resistance in this area here, we could possibly find an additional shorting opportunity to add to any trades that you currently may have taken last night over here, and we may be able to add to the position there. If you're not already in a position, well then this might be an opportunity for you to get your shorts in on the Australian dollar. The New Zealand also came under pressure, so that top hat flat spot there at 74.5 cents remains, and we've had a very big bearish engulfing pattern last night, and it's continued on with the weak Australian data. I also noted the other day that the Fonterra, which is the largest milk producer in New Zealand, which attributes to 60% of the country's GDP, forecasted a slowing demand for milk, and that could also have an impact on the New Zealand. I expect downside pressure, and that is definitely a major resistance level. So you may be able to find some short-term opportunities going short here on this. However, we still have, let's just use this line here if we can. We can't, okay. We have some support there that once we break through and we make a run for 73 cents, you could make some money there. And then possibly if you wanted to speculate that it's going to continue, you could hold your position longer or put two positions, one to take a quick run and another one to hold with a much wider stop but a much larger take profit region. The euro is still in a consolidation. Look at those three indecision candles. It's quite phenomenal that what's going on in the market has been able to contain price action to such a tight little spread. And I think we're going to see a deal at some point. And some trading ideas that I've come up with are straddling the price action and working a breakout. The market is going to break out in either direction, and that's going to come down to whether they strike a deal or whether they don't. I think the outcome, though, it's not as simple as that, is that they will do a patchwork. They will come up with a bridging loan in the short term and then possibly work out a deal down the track. But we'll have to wait and see what happens there. But I'm looking at potentially shorting the euro down here, and let me go to a shorter time frame. So you'll see that if we get a breakout, I'm giving myself plenty of room to stop any false breakouts, and going above the $1.14 by 30 pips, so a breakout above here, and I'm going down to a $1.12, just below a $1.12, and a breakout down there. So I'm giving myself plenty of room. That's the idea at the moment, and I'll put some buy stops and sell stops in at those areas, and I'll potentially wait and adjust those as I see fit, and I'll notify you if any adjustments that I make. But a breakout of a deal being done will definitely send the market for a run up to $1.15. Depending on the circumstances, we should get a break of that if the deal is quite sustainable for the future. But I'm still inclined to believe that a breakout to the downside is the highly probable solution at this point, considering the economy is not doing real well at all. Now, we had the CAD on the daily chart had a little bit of a pullback. It was rallying and going really strong, and oil had a little bit of a bounce last night. So if I go to an oil chart to show you, oil bounced there. So if I go to a 4-hour or a daily chart, I'll go to a 4-hourly chart, you'll see that the market dipped and then just below the 50 and got sucked back up, and it's now trading above it. 50 is a very psychological level for oil, and the market was hammering it, and momentum really got carried away, but then the buyers jumped back in and pushed it above the 50. So for now it's holding above. I'm not sure for how long, but for the time being, that created just a little bit of a boost for the CAD currency, and the US CAD just had a bit of a pullback. So I'll have to see where it goes from here. I don't see any major trading opportunities on the CAD. We've had a pretty good run on it lately, but need to be a bit patient. Now, this is a trade that I've been doing and hammering Twitter with you guys to keep you updated. I put out a buy here at 118.5, and to take profit at 119.900 for 140 pips. And we've now moved our stop loss there at 119.900. And we should see that if the market was to break and take that out, well, then we've been unable to make a higher high, and momentum's run out of this fantastic run that we've had, and we're happy to take the profits on the final, which would mean that the full order, we've banked 140 pips in total, which has been quite good. However, if the US dollar selling in the European market continues and this swing low established this morning holds at $1.20, which is a big psychological level, and it's now become support, well then we have some skin in the game to make some money as it runs up to 121. So that's the game plan. We're still in it. That's where the stop is, and we can't lose money from here on, and it's been a good trade. Hopefully we get more like that in the future. But tonight's focus is the Great British Pound and the inflation report. As I've said, last night you'll note that we did have a pullback off this downtrend. It's still holding. It's holding quite firm, and it's been impressive considering that the data out of the UK has been quite good, and there's no reason for the currency to be going lower. But having said all that, it's all about whether we get an interest rate, or the market starts speculating on an interest rate rise in 2015. The inflation report is the key economic release for that data, and should we see that they release tonight a deflation instead of inflation, meaning that they will hold off on raising interest rates for this year, well then we will get a sell-off. And the best way to trade that would be a breakout of $1.52 and heading lower. Should the market have a inflation and say that the economy is going great and there's still an open chance of us raising rates, well then we will get a breakout of $1.53, so it's a 100 pip trading range there. It's quite large, and we should make some runs further, and that should boost momentum for the UK and the pound. So that's the two black and white answers, and then we have the grey, where we could get a deflation report sending the knee-jerk reaction for the market lower. However, they could actually mention that this is a short-term view for deflation, and inflation pressures do look set to risk towards the economy in the future. Therefore, it will force their hand to raise rates at some point in the near future. If that's the case, the initial reaction of a sell-off from the words deflation would actually be retraced, and we could get a whipsawing effect, and the market actually buying back in on the speculation that future interest rate rises aren't out of the question altogether. So there's a bit of grey area there, but there's some trading opportunities. The breakout of the low, the breakout of this high here, depending on the news. Be careful of whipsawing, so you may want to do two orders, take a short run, and lock in some profits, and then also place a second order. And as soon as it gets away from you, move your stop loss to your break even, and you can't lose money. That way, if it does whipsaw you back due to the news and you're not fully aware of it, well then you won't be at risk of losing money. It'll be an overall net positive night. So that's some trading opportunities for the UK versus the pound now. With the Australian dollar being under attack, we have, I mentioned this flat top here in the breakout the other day, and we have got that, of course, with the Australian dollar this morning getting hammered on the employment figures. There's potentially more upside to the pound versus the Australian dollar if rate talk is left on the table, and you can make some serious pips in there as it would move above $2. So keep an eye on that. How to trade it would have to be, once the news comes out, you pull the trigger, let it run up to the $2 range and take some profit. And any of the other pound crosses you could have a look at. would be let me go to them here. We've got the pound versus the Japanese yen. Now it's been very strong as well on the 4 hour. If you have a look at the daily, it's been very strong on the back of the US Jap. However, if we were to get some positive pound data coming out talking about inflation, well then this is another one that would follow. This trend would continue and the price action should remain within this channel. And we should be able to get this channel looking reasonable just quickly here. Not doing a good job, but yeah, so the price action should continue with some strong pound data there on the US Jap. The euro versus the pound. Now this is one where the euro is definitely weak, but it's going to come down if a deal isn't done tonight and the inflation figures, don't forget we did break out below the 70, that's a big breakout of the lows. And if we do get some positive pound data, the euro's set to get hammered by this as well. And the euro will go lower here and the pound would actually gain strength. So we could see a trade potential there of the breakout of this low. So you could either jump in when the news comes out if you can catch it, or if you get a breakout of this low, jump in and take a few pips to the downside there on the euro Great British Pound. And the Euro CAD, once again, if you get some good news out of the pound, the CAD itself has been weak with oil prices. This could be just producing a bottom here, and we could just see some moves up further on to the upside. However, if the pound news comes out weak, we could see it dip below. Note that if we do get some whipsawing, I don't think it'll take out this low. We'll just see it jump down here and then possibly continue on its way should we get that grey area response of deflation, and then them mentioning that we only see that happening in the short term and we'll be raising rates soon as inflation kicks in the near term. So be careful of a whipsaw, be careful of support and resistance. In volatile times, the market can protrude through resistance by 5 or 6, 7 pips, chasing stop losses. That's very common, and so make sure you give yourself like a good 10 pip roughly range, depending on your spread, of course. If you're giving yourself a 10 pip spread on the top side here, less your stop loss, well then you've got to subtract your spread, and you're only giving yourself 6 now. So it'll be a 6 pip buffer, not 10. So be aware of all of those sorts of things. Good luck with trading. Keep an eye on my Twitter feed. I'll be giving you as much of the updated information as I can, and keep an eye on those trading opportunities. Write them down on a pad and be prepared to execute instead of panicking when the news comes out and price action moving and you're not sure what to do. Lay out a plan like I've just mentioned. Sorry it's been really quick and rushed, but I didn't want the video to go for half an hour. So all the best for trading tonight, and until tomorrow, trade well.